Alright, hello guys, glad to have you on board again today, Wednesday, intraday trades, you know the stuff. We're going to look at H1, H4 timeframes, or at least probably the same old things as we did last week. Nothing has changed for now in terms of the low risk strategy timeframes. We're still trading weekly charts and these big weekly supports that have been positively reacting in the weekly chart reference timeframes. And until then, what we've had is a set of flows. First one, second one. Remember, flow is when the prices are moving faster than the moving average and the context is succeeding to trade above this. So here is where you got a flow. Okay, same thing goes in here. Flow strategies tend to orchestrate in odd numbers, meaning that you trade 3 flows in a row and no more than that. You then let the bears take over and consolidate. So where would be in potentially the third flow? In order to trigger that, you need to break the previous high points. So there is no third flow guaranteed until we successfully broken above 4100. That's the TLDR of flow strategy. And despite that, once you know the structure, the only thing you pay attention to is to look at prices across Bollinger Bands. Okay, so you don't pay too much attention about the price structure and channels. In flow trading, there is no such a thing as a trend. It's just volatility arbitrage made by the market makers. So basically in here, we're trading the third potential flow, and you would have noticed that, hey, prices are moving faster than the moving average, and the context is starting to trade above it. So that's the sign that the third flow might be on the verge to come. But, until we succeed breaking this, there's no way it can be set at break-even. So try to be smarter than that, okay? And try to associate all of those information and process them. What is the current risks when you take what I've said all into account? We have positive sign that the bulls are really taking over control of prices, and this is not just like stupid narratives or I think or whatever. I just rationally see that prices are moving faster than the moving average, and that's the sign that the bulls are taking control. On the opposite hand, we stated it's too soon to be bullish because we haven't broken the level that will succeed, saying that the bulls definitely have triggered the third flow, okay? So until then, we have positive arguments, but not a confirmation. And that's the current stage we're in. Why do I think we might be staying in that system? And why definitely I have been profit taking anytime we've gone to the Bollinger Band is because I hardly think we're going to be able to sustainably break this level until we heard JJ or got the NFP and so on. I think the market is waiting for those catalysts for this breakout. Of course, we can get out there first. I mean, we can try marking down that level before breaking it, but for now, I hardly think we're going to succeed breaking without those catalysts being passed, or at least during they actually pass, okay? So that's the way it is to me. We could break by anticipation, but I think this could be dangerous to try attempting doing such a thing. Anyway, the risk is to the upside, but too soon to call that a one battle. Okay, so this market is not bullish. It will be when we'll sustainably break 4100. Until then, cautiously optimistic because you definitely have reasons to be. Until then, my trading strategy has been, remember, as I bought here and here and here, I had average entry price that weren't that good, and I needed to finance a stop loss, though I partial profit took in here to pay my stop losses, to pay for my stop loss at break even, and then I decided to buy back again. In here was a perfect buying setup because we had the bears trying to break lower, terminating a bear cycle, bullish signals. Well, okay, I got in. So I put it back, the money that I took profits in here. So basically reinvesting my risk without too much risk, of course, always maximum 2% risk on any trade that I take. I'm not a leverage trader, never did, and never will. But the thing is that reinvesting my gains in here on the moving average, that was very clear and easy setup to take. Second stage, of course, as we've gone right up to the Bollinger Band, I started to profit take again. Though that's really the way it is. Partial profit taking, remember, I am still bullish, largely bullish, by the way, something like 25% profit taking on that position again. Just because, like I said, I think we might be waiting to get further catalysts, though the market is probably going to stop and arbitrage volatility again until we get the gas to break this level. Though until then, I'm waiting for a couple of stuff. I will reinvest this profit taking once again without increasing my risk. So basically, I am increasing my position sizing without increasing the risk that I have on the scenario, and my stop is right here at break even. So that means if we ever get out there, I'm done. I'm just taking my loss and moving to another trade. And by taking loss, that means no loss at all, because the gains that I take pay for that loss. I don't know if you get that one, but anyway. So that's really the way it is. Now, if the market tends to keep consolidating flat like that, and if it ends up trading the rising context, and if for whatever reason I got the end of a bear cycle or trend crosses, breakout attempts, or anything that will give me an opportunity to trade against that, I will definitely do it. But until then, well, I take partial profits when we get to the Bollinger Band. I wait for potential signals. I don't know, if we trade again on the moving average, I'll buy again. Anytime I will trade in interesting context, and anytime I have sustainable signals to do it, I will reinvest the previous taken gains. That's really the way it is. Okay? That's simple as it is, reinvesting the risk. And of course, if I decide to go in and if I get proven wrong, I'll take a tiny loss. That's really the way it is. All right? Okay, so that's for S&P 500. And until further notice, cautiously optimistic and not being too stupidly anticipating whatever the Fed is going to say or stuff like that. Because that's really the lesson that I really you guys to understand, okay? I've heard so many shit in social medias lately, like people saying this market is irrational, we're all going to die, whatever. You know the thing. There is tremendous problem, escalation in Ukraine. China is going to invade that, and the Fed is going to come and wreck the speculators. And so I was like, the fuck is that? In 10 years trading, I've heard narratives like that over and over again, consistently. One narrative comes and flushes the previous one until the next one flushes this one, and so on. Narratives are consistently present in the market. I've never seen a moment in the market with no narratives. There always is one. The thing is that if there's one thing I can tell, I've never seen someone sustainably making profits in the market by trading narratives. Instead, I've seen how professional works, and they always not give a fuck. The only thing there is that narratives can eventually help moving the volatility around, but that's all they do. So the only lesson I can teach you today is that if you're trading on flow timeframes like that, of course, narratives pay attention and matter a lot, because these can help open the doors of volatility, open the floodgates or close them. But this is something that the market makers do, and you have not a single chance to have an edge against them. So that's the thing you need to learn, even if that means learning it the hard way. But on that front, gosh, you don't ever will compete with the market makers. So try not to be stupid enough to think you can. So the narrative and controlling volatility and spreading narratives out there is none of your fucking business. Let the market makers do this. The journalists, the analysts, and all of this, this is not your job. Your job is let them do their talks. If you have reasons to trade one way rather than the other, for whatever reason there is, which clearly is to the upside now, you rather like to do this, even if that means the narratives will sometimes prove you wrong. Okay? The secret in successfully trading markets isn't following those narratives to try improving your technical setups, it's just to account the fact that technical setups can't be perfect. Sometimes you'll be proven wrong. Sometimes it will be because of a narrative. But you just can't change the technical rules because of this. And it took me some time to get to that lesson, really. And I made the mistakes to consistently listen to narrative over time. And it didn't really serve any purpose over time. And I've never been as good as trading then the day I said, okay, I'm never going to pay attention to this shit anymore. It's really just consistent noise. They'll let it be, okay? The current noise is the Fed is going to crack down on the market because whatever shit that is, inflation, just drop it. Look at the fucking charts, okay? For now, like I said, everything sent the same message, cautiously optimistic, and if it goes wrong, well, take your stop loss and move to another trade. Don't try to say, oh, I was wrong, I should have listened to the narrative and so on. Just never, ever do that, okay? You rather like to be proven wrong by the markets and never listening to the bullshitters out there, okay? Really number one rule. When it comes to crypto, well, I'm sorry to say it, same stuff in here, but it's just in a much more volatile way. So remember the way we are in Bitcoin. Same old thing, big, massive weekly support in here that has been responding positively. First flow in here. I bought the second one on the Bollinger Band in here. And like I said, well, we broke, okay? We broke the previous high points and it's gone absolutely nuts. I mean, look at the Bollinger Bands. They're enormously being shifted, massive volatility burst. Look at the context boxes. They're all broken, several ones broken in a row, top and bottom context boxes. So this is clearly the sign that the market is excessive. Yes, okay. But when the market is excessive on your trades, well, this is just no more than the market is volatile. And we all know that cryptos are volatile, both to the upside and to the downside. But for once upon a time, gosh, you're actually in the right direction. So why the hell would you this time around say, well, the volatility is irrational, the market is going to go down, because I've heard someone in YouTube saying this is an unhealthy market. Fuck that. Jesus. I mean, try to be smarter than that for once. When the market goes faster than expected in your direction, it certainly isn't a reason to early profit take and to say, well, I know this time around it's going to go down. I've been proven wrong so many times in the past. So this time around I'm going to be wrong as well. I'd rather like to take that nice gain. Shit. Look at the charts and do what the charts tells you to do. Like I said I will not worry a bit until at least I see a third range boundary being confirmed, or I would like to see at least the context boxes being folded again. So now we start to see this. The market is going at least back to rational. Now, what has it done until then? Well, we've built that third range boundary, and like I said, I don't pay any attention to this. I probably know we're going to fuck it all up. So that's exactly what happened. We squeeze the third range boundary, and when we squeeze the third range boundary, what happens? Well, personally, I will buy any retracement of 50%. So currently, I'm willing to buy Bitcoin if it goes right back down to 20K. 22K, sorry. Though the thing is, that's exactly it. As we fucked the bears one more time, I know they're going to be forced to buy themselves out of this market. And I start to see a pattern that, of course, this one is a bit more experienced. So I'm sharing this one to you guys. You do whatever it is that you want with it. You certainly never trade that alone. Okay, this is an experienced pattern. But I start to see this happening because if Bitcoin successfully go to trade 20K again and rebounds, it's probably going to create another third range boundary, which is likely going to fuck up as well, okay? And if the market does that, like 2 times in a row, it tends to squeeze your third range boundaries, and if for whatever reason you see that prices are kind of trading in these kinds of parallel channels, okay? Remember one very important thing. When the market is doing like that, like consistently flat consolidating, okay, which is exactly what we do now. We consolidate flat and then boom, we go up, though the volatility is like reducing and then exploding again. Exactly like that, okay? You see flat Bollinger Bands on the lower time frame, and then boom, it's opening again, and then flat again, and then boom. It's going to do this thing multiple times in a row. You have not a chance to know how many. It can be 1, 2, 3, 4, 5, 6, 7. I've seen these kinds of things repeating sometimes more than 7 or 8 times in a row. Okay, this is called the washing machine pattern, which is basically nothing more than a parallel channel in which this consistent volatility manipulation are very psychological, impactful in market participants. You guys will every time think that the market is consolidating before doing this, because this time around the Fed is going to come early February and it's going to crash the market, but it won't. And if it goes up here, then the next time around another narrative will be there, always leading you to believe that this thing will crash afterwards. The true thing is that it probably won't. And this pattern has absolutely no structure. You can't anticipate this pattern. You just have to let it play out. Until the prices consistently break out of the channel, you will have always a pullback to get out of it. Okay? So just let it play out and be patient. What this pattern tells you, okay, when this pattern occurs, it's a rare pattern. That's also why it's not in the coaching trading lesson and stuff. This is expert stuff, so I'm sharing it to you guys. You do whatever it is what you want with that. I'm just saying, whenever this thing happens, okay, don't try to trade it. Call a professional trader. And the thing is that it generally means that you are trading in a higher time frame low risk area, far away from a higher time frame low risk area. But the thing is that if you zoom back into the weekly reference time frame where the low risk is, why do we build this structure? I see absolutely every check mark to see that structure building itself, because there's not a single seller in here. Remember that in this weekly reference time frame where the low risk strategies are, there's not going to be a single seller until we get above at least 30K for now. It's going to update each and every quarter, which means we could be in that 45-degree angle, grinding our way to the upside for several weeks or months in a row, and still we will not reverse. Why is that? Because there's not a chance any sellers show up out there. Of course, everybody will tell the opposite and say, well, we're on the verge to crash or whatever. As long as we trade this pattern, and for now, it's just an early guess that I do, but I have all the clues suggesting we will do it. I need to see this flat consolidation being broken above next time, and I will be consistently sure about it, okay? This will definitely be this parallel channel with tiny consolidation and explosion of volatility until then, like flat impulse, flat impulse. Boys, this is the washing machine, and that's the sign that something happens on the bigger time frame. Stop being stupid short-term trading and trading following narratives. Just be smart enough to zoom out and understand that the weekly chart says it clearly. There are no chance to find real sellers in those prices. So what are we going to do? We're just going to try moving higher, and there's so many ways we can do it. The washing machine is one of many, many price structures that push prices higher slowly but steadily, leaving every bears trying to fight against it in the sideline. So that's really the way it is. The lesson I would like you guys to understand from this thing is that if you've been trading bullish in this flow, well, congratulations, folks. We're probably in an advanced pattern that will deliver more gains than anticipated. Don't be stupid enough to take those gains off the table too quickly. If you have fallen for this already, meaning you've already profit took, well, that's too bad, but it's not a problem. Don't try to buy this structure. Just let it play out. The number one lesson is, well, if you took profits too quickly this time around, try not to do it the next time, okay? But that's not a problem. You missing on some gains. Well, missing some gains is something we all do all the time. I've lost a gain right now and probably another one a few seconds later, okay? There are infinite amounts of gains to be made in the market as long as you risk fucking limit correctly. So missing on a gain, not too bad. Just try not to replicate the next time. But if you fight against this thing by selling without a single reason to do it, but just to think the Fed is going to break everything and whatsoever, Jesus, fuck, listen to yourself and stop listening to these folks in Twitter or whatever. Whoever is just complaining and bargaining about this bull rally is too... No, this is not a bull rally. For now, it just looks like a market that has no sellers. And that doesn't mean it's a bull market. That just means we might not have gone that low, and now that no one is selling, prices might just be trying to find another neutral area, and it might take a few months to get there. And until then, if you keep on consistently looking for bear trades in the H1 time frame, you're going to be washed ahead. Okay? That's the lesson I want you to learn now. Until we get clear evidence that this market has found a top, as long as it plays this stupid pattern of arbitraging volatility, that means the market maker is just sending a lot of information out there for you to trade stupidly, but in reality, prices will likely go up. Don't be stupid enough to go bear. And if you profit took already as a bull, well, like I said, too bad, but normally you should have your investment portfolio backing for those gains. So just cool down and understand that these price manipulation generally means the broker will slow down price movements. It will be slow and consistent and boring, and people will inevitably want to fight against it. So you will hear a lot of bear narratives every time the market will do these flat consolidations. Just don't fight it, okay? Just don't do it. As long as we trade inside the channel, let it happen. It can happen 1, 2, 3, 4, 6, 7 times in a row. As long as it plays this way, let it play out. That being said, more than enough for today. Sorry, I was kind of very, very harsh today, but I really, really wanted to cut down on all the crap that I've seen in the social medias. Very dangerous guys out there sometimes. Bye-bye.